Hi, I'm here today with Gary, our mortgage broker, and we're going to be discuss one of the big issues affecting the Northeast market at the moment. Is the Northeast property market on fire, Gary? What do you think?
Yes, I think that definitely the market's on fire at the moment. Talking to other agents like yourself, the amount of clients, the amount of phone calls we're actually receiving, it is really buoyant at this moment in time. We've got a huge lender appetite back in at this moment in time. The lenders are sort of wanting to lend. We've got the 95% deals, which we'll talk about in a bit, Nigel. We've got the stamp duty extension. So at this moment in time, it's a fantastic time to be buying in the Northeast.
Yeah, I mean, if we look at the stats from Rightmove, house prices are up 5.4%. Last month they were up 2.2%, but I actually think that's been understated. You know, there's tons of anecdotal evidence where we're seeing properties selling in our estate agency. They're flying out at offer, if not above. We're visiting other agents and speaking to other agents, and they're getting low on stock because properties are selling. I personally, we've been in the market now for about 15 years, and I haven't seen a Northeast market like this since about 2006. I mean, what do you think, Gary?
Exactly the same. I was about the same time experience with yourself, 2006. And again, I just think things are flying out. The properties are going for asking price. They're going above the asking price. I think lenders, surveyors and valuers are sort of being realistic now in realising that properties are getting marketed correctly with the estate agents now, instead of sort of putting them on at a too high price just to get that sort of listing. I think they're getting priced realistically. Things are going out the door faster than they're getting them in.
Yeah, I mean, just to give everybody a little bit of history of the Northeast market. So in about 2006, 2007, house prices actually peaked in the Northeast, and they're still slightly below where they were. But prior to that, house prices doubled in about 5 years. And so what we're seeing is we've had this very limited growth in the Northeast over the last 10 years, where it's ticked along at a couple of percent a year and kind of getting back to where it was in 2007. But now we're seeing some real momentum behind that market, and some of that low equity or no equity which has been in property seems to be disappearing, which will drive the market forwards. I mean, there's also plenty of reasons which we'll touch on now why we think the Northeast market is going to continue. So Gary, in terms of the Northeast market or what's happening locally in Newcastle or in the surrounding areas, is there anything you'd like to touch upon which is going to add that further momentum locally?
Yeah, so you've got some fantastic universities. It's the influx of students. So there's a big investment area for landlords coming into the market, where they're going to be getting sort of guaranteed rentals off the student population. You've got a lot of development which is going to be happening on the Teesside, which is the Whey Aye Wheel. It's going to be a big waterfront experience. They're going to be building a wheel which is going to be 140 metres tall, which is going to be bigger than the one down London. That's going to generate at least 800 plus jobs. So again, that's going to be a big influx for the city, a big massive boost. And I think with all this going on, it's just going to basically increase property prices, it's going to increase the demand for properties. And it's just good news, Nigel.
Yeah, I mean, in terms of Newcastle itself, we've got all that going in. Also within the Northeast, Blyth, they're on about building a giga electric plant up there. A lot of investment going up there. Got Treasury campuses moved up to Darlington, Freeport and Stockton. There's tons going on at the moment, which seems to be giving a little bit of momentum behind the market. And of course, Gary, if you want to touch upon the stamp duty being extended, which again is pushing those prices further.
Yeah, great news. So I think what's happened is everybody's been overworked these last few months to get the deadline before March the 31st for the stamp duty extension. And it's been a big relief and a big common consensus prevailed, where the government's basically said, look, there's going to be a lot of people caught in the chain, where they've had offers accepted and they could have fell through, before the deadline, March the 31st, and getting impeded with the extra stamp duty. This has now been extended till the end of September. And again, it's just boosting the housing market, it's boosting the economy, and it's just great news for people just basically trying to get on the property ladder as quick as possible. And what we've also found is with lockdown, a lot of people, there's been a lot of consequences, don't get us wrong, a lot of people have lost jobs, financial hardship, But for some people, they've managed to save money because they've not went on holiday, they've actually not went out socialising, so they've actually been able to save deposits. So again, this is another boost for the housing market. So we've got people where potentially a year ago, they would never have dreamed of maybe saving up 5 or 10%. Then now with access with the lenders, opening up the 90% deals, the 95% deals, it's just good news again.
Yeah, I mean, I'd agree. So, I mean, the Bank of England says there's 150 billion pounds extra in people's bank accounts than before lockdown. So that's 150 billion wall of money, which needs to come into the UK economy, plus the 200 billion the government's spending. So a lot of people are like, when furlough ends, this could cause problems for the country or the economy. Whereas I actually see it, you've got 350 billion flowing into this already. Economy which is ticking over to me. I mean, I actually think come the summer we're going to have a really red hot economy, and you'll see that naturally flow through into the housing market.
Yeah, definitely. Yeah, you're going to basically, you've seen people locked up for a year in their homes, not being able to socialise. The hospitality trade, leisure trade has been sort of really hit hard. That's all going to go open up. They've more or less put a block on any holidays abroad now, which all the news. So everybody's going to be staying in sort of this country. It's going to be a massive boost for the economy. And yeah, there's going to be lots more money that's actually come back into the economy, because everybody's going to be staying in the UK. So holidays are going to be staying in the UK. They're going to be going out and getting the leisure and the hospitality trade back up. So it's definitely going to be seeing more and more. The economy's going to grow, I think.
Oh yeah, I totally agree with you. And also, the good old government loves boosting the housing market, so now they've come up with 95% mortgages. Have you got any feedback on that, Gary?
Yeah, so the 95% mortgages, again, it's great news. What this does, it opens up the housing market to people who obviously have got low deposits. It gives access to properties which are not just new builds. So you've got your normal terrace properties, semi-detached. We call them second home, like second properties sort of thing. We've got half a dozen lenders coming out in April, but we've actually, Nigel, we've got 3 lenders who have already come into the market now at 95% deal. And as an example, we had a first-time buyer call us up last week, and we did a first-time buyer mortgage with the Cord Mortgages. It's an exclusive deal through ourselves as mortgage brokers. Rates are starting from 3.99 for a 5-year fixed rate deal. It's got a 995 lenders arrangement fee, which can be added to the loan. Free valuation, and because we've got a fantastic team at the mortgage brokerage who go above and beyond clients' expectations, and we package everything up, this enabled us to get a mortgage offer out within 2 days. So this client, first-time buyer, bit of an accidental, again, first-time buyer, which has managed to save a 5 to 10% deposit because of lockdown, working from home. And she's now in the property ladder, and it's just happy news. In come April, we're going to get more and more lenders coming into the market with the 95%. We've got more lenders coming into the market with the 90% deals. So this is giving access to clients who have got the small deposits, and another boost, really.
Yeah, no, I mean, I've always thought personally, like the Northeast market has never been limited by affordability. It's one of the most affordable areas in the UK. So it's not that people's wages won't stretch into the mortgage. It's more to do with the availability of equity. And actually, I think that the 95% mortgage market piece will have a greater effect on the Northeast because affordability isn't a problem. It's always been the equity element.
Yeah.
So I'm hoping that with that rolling out through the country, and of course that's not just new build, that's secondary, not secondary homes, but that's homes which have already had a past owner, that's going to really give a push to the Northeast property market. And again, in 2006, we saw that when there was more availability of low deposit loans, especially from Northern Rock, which was based up in the Northeast. You saw an incredible movement of house prices. And again, Gary, just touching on the mortgage market, because I know this is your specialty and you love talking about rates, Gary.
Yes,
where are we on low residential mortgages and low buy-to-let mortgages?
So residential if you've got a good credit score, you fit the lender's criteria and everything, there's some fantastic rates of 1.3 fixed rate deals, 1.19 with some lenders, depending on the loan to value. Obviously, you need to be putting about 25-30% in. But you can't get any cheaper money than that, to be honest with you. You buy to lets. Again, you're looking at anything. We've got some lenders who are doing sub 2%, 1.99 fixed rate deals. Wow. And I'll give you an example of how we've helped some clients recently by maximising this cheap money in making their sort of portfolios work for them and the equity in the houses. So we had an example of a client who basically, they've got a portfolio of properties, they've got a lot of equity in their properties, and they wanted to basically move from the residential and move to upscale, basically, to a bigger property. Now, most of their money was tied up in either their current residential, plus the existing portfolio. And what we've been able to do is raise money against 3 of their properties on the buy-to-let, keep their portfolio at a 65% loan to value. So again, we've kept it so the risk is sort of low. We've raised a large amount of money for the deposit, and they've actually upscaled and bought their dream home for the family.
Wow.
They're getting rates of 2.35% for 5-year fixed rate deals on the buy-to-lets, and they've got 1.5% fixed rate deal on their residential. You couldn't get any cheaper money, realistically speaking.
Yeah, I mean, I always say that to anyone, you know, especially I've got friends who aren't property investors, is debt is so cheap at the moment, you'd be stupid not to take debt out. Because when you're taking debt sub 1 to 2%, you know, in the Northeast, yields, prime property-ish, 5%, slightly less prime properties, 5 to 8% yields, and then you go on subprime into some of your flats and some of your areas, which are really tougher areas, you've got 10% plus. So the great thing about the Northeast market, which still remains to this day, is you get that double bubble, whereas you wouldn't get this in some of the areas down south in England, is you get that double bubble of getting your rental yield, which will provide an income, plus you've got that equity growth from house prices going up. And like we were discussing, that may become more of an issue in the Northeast, that you actually are really getting that double bubble. You're getting that income, plus you're getting the equity increase. Because in all honesty, with ourselves, is we don't teach newfangled ideas. You know, you own properties for 20 to 25 years, you put good tenants in, you receive a good long-term income, and you sell it at the end of those 20 to 25 years. It's going to pay for your pension, to go on your cruises, to enjoy your life. You know, it will make a substantial change, and that's what your aim should be, to over that long term, which would be at least 5 years, 5 to 10 years. So, I mean, my final question, Gary, actually, and this is the big question. This is the big question, actually, in terms of property, and especially in terms of the Northeast market. Do you stick or twist? And what do I mean by do you stick or twist? Is do you stick and you think, well, when furlough ends, you know, when the economy has to open back up and the government support is withdrawn, are house prices going to come off? So do you stick and hope for those house prices to come off and get a bargain? Or do you twist now and go into this hot market because you think there's so much momentum that actually it'll never come off? It'll come off in 2 to 3 years' time. So what are you, Gary? Are you a sticker or a twister?
I would say a twist, and what we're seeing, just experience, especially these last 3 months, we'll see since the turn of January. And I'll give you a couple of real life examples of sort of what the sort of current climate. We have never been busier for a good number of years with inquiries, mortgage applications, and we've got clients we've got landlords who are making raise money, wanting to build a huge, quick portfolio now to get the yields which you've just mentioned, and we've got people remortgaging the houses or selling the houses and moving up to get their dream home because money is so cheap, and they're not sitting and waiting, Nigel, because you could sit and wait 6 months, 12 months, nobody knows what's around the corner. And the way things are going, what's it to say? House prices are just going to keep on going up and up at this moment in time, and rates are going to stay sort of pretty low. I just think it's an opportunity for people just to basically do it now, and basically get on the property ladder, move, build your portfolio. I don't think interest rates are going to be any cheaper than they are this current climate. And with the lenders having an appetite to lend for the right clients, this is an ideal time now.
I mean, yeah, I'd agree. I'm definitely a twister, and I think the time's to move now. There's a hell of a lot. You know, you're talking in like areas of Middlesbrough, 80 to 100 grand for a house, 3-bed house. Do you know what I mean? House prices are still relatively cheap in the northeast.
Oh, yeah, Nigel, I can give you a real example. I've got a guy, and over the last 6 months, we basically refinanced his property, and his aim is to get a portfolio of 25 properties. We've, since January, he's bought 8. He's on 14 properties now. We had 6 existing ones. We've done 8 in the last 3 months. So just to go back to the question, stick or twist, he's going for it. He's an experienced landlord, and he's buying properties in the northeast, all over the northeast. He's picking things up for £70,000, and he's getting rentals of £500 a month.
Wow.
And all of a sudden you start doing that, times it by 5, times it by 10, times it by 20, and you're not getting a huge amount of debt, but you're getting a fantastic return on your money, because the money's so cheap with the interest rates, and he's getting a good yield. So he's going for it, and that's a real life example. Whereas we do a lot of business down London. On the flip side of that, we've got a lot of clients who do a lot of business down London, whereas this client I'm talking about, he could be buying 5, 6 properties for what somebody might buy 1-bedroom flat or a 2-bedroom flat down London. They make it £1,000 rent, whereas he could be potentially getting £2,500 rent for the same sort of money spent.
Yeah.
So again, going back to why should you invest in the northeast? That just hits it in a nutshell, realistically, doesn't it?
Yeah. No, I'm a definite twister, and it's something I'm definitely keeping my eyes open, especially in certain areas where some of this investment's coming in. So, but yeah, so overall from this, Gary, mortgage market is a big thumbs up. Properties is a massive thumbs up.
As long as it's medium to long term, Nigel, we've got to remember medium to long term. Yeah. Just to get you, like, it's not a quick fix, not a quick hit. Yeah.
Yeah. So brilliant. Okay, well, hopefully when we meet up in a month's time, Gary, we can talk about some more positive news.
Oh, definitely. And in the meantime, if anybody wants a free no obligation review, contact Nigel at NGU or contact ourselves, and we're happy to basically help and give you some guidance.
Yeah, I mean, just to explain that actually. So if the market at the moment's a little bit like a steam train, yeah, and so if you want to get on this steam train, you've got to get to the station first. And what I mean by getting to the station is you've got to chat to Gary, a mortgage broker, who'll start discussing your case, start discussing your mortgage options, and then you'll be ready to get on that train. And some of that free no obligation conversation is just to get you in the right place so you can start putting offers on properties and start looking for properties. Because without you knowing if you can raise finance, or without you knowing what finance and at what price and what size of a deposit you need, you ain't getting on that train. So the time is now. If you really do want to get on board, give us a bell, and we'll get this going.
Yeah. Good stuff, Nigel.
All right. Cheers, Gary.
See you in a month. Thank you. Bye.